Tesla Shanghai delivered over 82,000 deliveries in the month of November. That is a sheesh moment. And personally, guys, for December, I am expecting close to 100,000. So that's going to be an insane moment for Q4. But overall, Q4 earnings and deliveries for Tesla is going to be interesting. And I'm going to get to that in this video here. We're going to look at what deliveries and productions could be, and then later see what the stock price could be on that. It is a year that if they go below margins, we have not bottomed yet. And that's not a good sign for Tesla and the stock could go lower. But if we've bottomed and we've matched the same operating margins as in Q3, that's a very bullish sign. That means we have pretty much bottomed and it's no way up now. So we're gonna look at this scenario. We're gonna see what the stock price could be in both scenarios. And if you guys are ready, man, then why isn't like button smash? Come on, man. Let's get down to it. Let's go. And subscribe. So here's my production and delivery chart. If you guys are a regular viewer of this channel, then you guys already know how this works. It's very simple, very easy to understand, and very basic. And this is available on Patreon as well. So if you guys want to get more access to the whole Tesla charts, the prediction, the retirement plans, all that kind of stuff, how many shares you need, all that stuff that I do here on the channel, click right here. But let's start off with Shanghai. For Shanghai, as you guys noticed, for October, we have over 72,000 and November, 82,000 colored in blue. That's because these numbers are already been delivered. So for delivery section that's colored in blue has already been delivered, which is only we know from Shanghai because they bring on the numbers. Fremont, Berlin, Texas, they don't do such thing, which it would be really helpful if they would and could do it. But nonetheless, for delivered section, I put only these 2 months of this factory alone, and Q4 of 2023 here are all production. Later, we will get the delivery rate from it, and then we will add whatever we get from that to the delivered of Shanghai to get total deliveries of Q4. If that got a little confusing, trust me, it's easy. Stick with me. In Shanghai, October we got deliveries, November we got deliveries. So let's figure out what the production number would be in December. I did 2,600 vehicles being produced on the daily because I do believe they're at max production for 31 days because they get no days off in December. That's about almost 81,000 vehicle produced. In Fremont, they do an average of around 1,700 vehicles, and that's the max that they can do because the capacity of that factory is around 650,000 vehicles produced annually. The factory, they haven't done much upgrades to it yet, but keeping it simple, 1,700 vehicles being produced times 31 days in October, we get almost 53,000. For November, we get 2 days off, so 28 days, 1,700, almost 48,000 vehicles. And December, because of Christmas Eve, we get 1 day off there as well. 1,700 vehicles, multiply that by 30 days, 51,000 vehicles. Overall, a little over 151,000 vehicles were produced in Q4. Now moving on to Berlin and Texas. Now these guys are interesting because I've been waiting for them to announce 6,000 vehicles being produced weekly, but they haven't. It's interesting. We know why. Berlin and Texas, they had a massive upgrade, but now they don't have that massive upgrade anymore. For Texas, sure, they're rolling out the Cybertruck. They're thinking to do the compact car there sooner than anywhere else. But why Berlin? Why is that lacking? So that's interesting. So nonetheless, I scaled back my numbers here for these 3 months. For October, I put the daily production of around 750,000 vehicles. That's about a little bit over 5,000 vehicles being produced weekly. For 31 days, that's a little bit over 23,000 vehicles. For November, I increased it to 775 vehicles and 30 days, because 30 days in November. I'm not too sure if they had any days off there or not. That's a little bit over 23,000 again, same as October pretty much. And December, 800 vehicles being produced daily, just below 6,000, not reaching 6,000, but just below 6,000 for 30 days because you do have Christmas Eve off, and that's 24,000 vehicles being produced. Overall, a little bit over 70,000 vehicles being produced in the Berlin factory. Not bad, not bad. Texas, same thing, mirroring Berlin, even though I do think they're a bit slower compared to Berlin, but same numbers in October. In November, the same amount of numbers being produced in Berlin, which was 775 times 28 days because they get 2 days off, and that's about 22,000 vehicles. In December, 800 vehicles. Christmas Eve, same thing as Berlin, 24,000. Nonetheless, almost reaching 69,000 produced, which is Quite ironic. Total production, if we exclude October and November of Shanghai factory, it's just over 370,000. If we give this a 95% delivery rate, that's about almost 353,000. And if we add the delivered numbers from Shanghai, October, November, that's over 500,000 vehicles. So that is awesome. If we can get that, sheesh moment. That'd be amazing. That would mean Tesla can now produce on an annual run rate more than 2 million vehicles, which is awesome. However though, is 95% delivery rate a realistic scenario? Because we do know Berlin and Texas, their ramping is not increasing, or at least it's very slow. So maybe 95%, if you want to stay conservative and be more safe, is a bit too high. We can go 93%, just below 500,000. Maybe we can go as low as 90%, and that's about just almost 489,000 vehicle deliveries. If we take that number, that would be a total delivery number for 2023 over 1.8 million vehicles. So more than what they said or promised at the beginning of the year. Now, what number do we take? Should we take the 500,000? Should we take the 480, 490, 507,000? What number should we take? In my personal opinion, I'm a very optimistic guy. So I'm going to say 500,000. And we're going to start there and work our way down. So here's the chart, how we determine what the stock price could be. And again, if you're a regular viewer, and if you're not, why haven't you smashed that like button already, man? Come on, we do a lot of Tesla stock here and other stocks as well. But 95% of my content is all Tesla because I'm going all into Tesla stock. But I do other stocks as well. Average selling price, I increased it to 43,000. Why? Well, because they're increasing prices again. And although it's a couple hundred here and a couple hundred there, it does add up to 43,000. And nonetheless, we have version 12 coming. We have FSD entry going to China. Not yet. I think maybe sometime in January or maybe February, March. But nonetheless, just the price increases alone, I think 43,000 does make sense. I put credits here around 425, services and other revenue around 2.3 billion with the profits here as well. Leasing 510,000. Again, leasing is being backed by interest rates and they're high. And they're not coming down maybe for another few quarters or so. We do know that with more deliveries, this number would go up, but not too high, not too much in my opinion. I put vehicle gross profits here of 16.3%. Why? Well, because we got economy of scale working in Tesla's benefit, because now they got the factories, at least for Shanghai and Fremont, going full capacity, while Texas and Berlin are still ramping. And as well as they're increasing prices. And as well, COGS per vehicle is going down. So you get triple whammy with this. So that's why I'm saying 16.3%. Energy here is going to surprise us again here. I put here about 1.8 billion in revenue. Now this could be less, but profits, I'm betting that's going to be reaching maybe even the mid 400 millions. But I put here 438 million, about 25% of the total energy revenue here. Operating costs around 2.75. I know this sounds aggressive, but again, you guys know me, I like to stay conservative here. Taxes here, to about 250. Other income, including interest, 500. And this could be more. But we also got to take an effect on negative FX currency, because that always comes and bites us in the ass. So this number could be close to 800 million, but I'm going to remove that FX currency and just say 500 million here. Stock-based compensation around 450 million. Shares outstanding is obviously being diluted. So right now, Wall Street is saying that the EPS target for them is around 72, 73 cents. The last time I saw it, I mean, it could be different. You guys will see on the screen here. But we're going to say 72, 73 cents. We'll even say 75 cents just to, bring it even higher. If Tesla does 500,000 vehicle deliveries, first of all, look at this. Total gap gross margin is 18%. So that's not just bottoming, but going up. So that's amazing. We have operating margins staying stagnant. So that's really good. If we can see this in Q4, that's amazing. This would be flipping awesome. But this, we need 500,000 vehicle deliveries for. We will play around with the number just in a bit, but you'll see. Total revenue is approaching $26.5 billion. So right off the bat, you already know that they are going to be projecting more than 100 billion as an annual run rate next year in 2024. That's insane. Everyone thought that this quarter is gonna, break Tesla's 100 billion mark, but it looks like we're just gonna be just a little bit less than 2 billion shy from that. So close if this happens. I really hope they can reach the 100 billion this year. EPS non-GAAP 78 cents. So it's going to be a beat. Now here's the thing, guys. The EPS $2.67, lower than Q3. Why is that? Because Q4 of this year EPS was lower than Q4 of last year. So if we go ahead and take the fiscal year of it, it's going to be less. And that would mean Tesla needs to be trading at a higher PE to have the same stock price today. 91 PE, that's a stock price of $243. A market cap just almost reaching $800 billion. If we want to be trading around the same place. Now here's the thing, if we see margins have bottomed and if we see margins are going up, I can definitely see 100%, no question asked, the PE being valued more. Investors are willing to pay more of a premium for the stock today. Why? Because of Cybertruck launch. Why? Because margins are going up. Why? Operating margin is going up as well. Why? Interest rates will be going down, so there'll be more demand for Tesla. So I can easily see if the sentiment is right and everything is going right, we can probably see a PE going as high as 120, and that would be around $320 per share. My price target for 2023 is 260, and that would be a PE of around like 97, 98, somewhere around there, and I'm sticking by it. I made this price target back in 2022, and I think that's what's going to happen. 2024, I'm predicting the stock will be around $350 per share, and I made a video about it over here, and I'm pretty darn confident about that. But nonetheless, that's what I do think could happen if we have 500,000 vehicle deliveries. But what if we don't have 500,000 vehicle deliveries? Well, things can get not too good. Let's put 480,000 vehicle deliveries as what the market is anticipating around there. Boom, look at that. So total GAAP gross margins, that is staying still. I mean, that's actually still beating it. So that's a very good sign, but operating margin 7.3%. Operating margin has not bottomed yet. But the interesting is they're making more profits. They're making more net income from operations. How is it that they're getting lower in margin, operating margin, but their net income and profits and earnings are more? This is a very good and amazing bullish sign for Tesla. EPS non-GAAP is 74 cents. So again, if the target is around 72, 73 cents, it's still a beat. But if it's 75 cents, this is not going to look good for Tesla at all. And because of this, I can probably see the stock maybe trading lower, maybe below 80 PE around there, probably going back to the 100s, 200 marks for the time being. You guys have to understand that 2024 is the year where Tesla recovers all the earnings and earnings per share and profits. It's the year of recovery for Tesla in 2024. 2025 is going to be a fantastic year for Tesla, and 2026. Now, I'm not saying 2024 is going to be a bad year for Tesla. It's actually going to be a great year. I think profits and revenue is going to be far exceeding, especially revenue, far exceeding in 2023. 2023 has just been a brutal year for Tesla. And if Tesla can break even in Q4 this quarter, then the recovery period has started. And that is flipping amazing. But if operating margin is lower, has not bottomed yet. Maybe Q1 it'll bottom, maybe Q2 it'll bottom, because we have the Cybertruck ramping, and that's a cash furnish for Tesla. So we can probably see margins even going lower in Q1 or Q2 of 2024, unless something else happens, like the FSD gets licensed out, or we have energy ramping up even more, or FSD enters China. Other sources of Tesla's revenue can come and bring the profits higher. That'll be really good. But to stay conservative here, let's put 480,000, because that's what the whole market is saying. That would mean a PE of around 94, 93 to keep the stock price what it is today. And interest rates, again, if interest rate is the biggest catalyst, if that could come in, I can easily 100 PE after Q4 earnings, maybe even going high as 120, reaching the 320. So realistic price ranges between now and then, again, I'm not going to change it, is between 250 to 300. Now, because if they miss in EPS, I could even say as low as 200. And I am kind of begging for Tesla stock, looking forward to it to go to 200 so I can buy more shares. That's a bargain. That's going to be a bargain price in the next 5 years or so. But nonetheless, my price target is 260, and I'm going to keep it at that. I am not going to change it. Period. Now, obviously, guys, this is all a prediction, and I'm just guessing at this point, right? We're going based on little information that we know. The good thing is we have October, November delivery numbers from Tesla Shanghai to calculate what it could be for all of Q4. But one thing's for sure, guys, Q4 is going to be record in deliveries. Whether it's 480, 500, 510, it's going to be a record for Tesla. and it's gonna be absolutely a sheesh moment. But reality is, guys, in 2024, as I mentioned earlier, it's a recovery year for Tesla. 2023 has been a very, very brutal year for Tesla because of interest rates going high and Tesla cutting prices to make sure that people can still afford their monthly bill, as in leasing or financing, because 90% of people don't go there and buy cash. Their car, they don't buy it in cash, right? So Tesla had to bring the prices down so they can keep the rates monthly as the same as it was when the interest rates were a whole lot lower. And in 2024, I do expect rates to start going down, maybe not as big as we think, by a quarter or half. But a sign that we are going down in rates is a really good sign for Tesla and overall the stock market too, for equities. And I think that's what's going to be the big catalyst in 2024 for Tesla stock to breaching over 300 and reaching my price target around 350. Even though earnings maybe only 10 or 15% more than this year. That's my personal opinion. Until FSD is not solved and that's not in the revenue stream, expect these 15 to 20% growth in terms of earnings every single year. In my valuation from 2025 and onwards, I do expect Tesla to grow 30 to 40%, including earnings, because of full self-driving once that comes online. Once that happens, I'm not saying if, I'm saying once that happens, watch the stock go crazy in 2025 and 2026. Not financial advice, but in my personal opinion, the reason why I'm all in into Tesla stock. Full self-driving, baby. That's what it is. And I made a video about it over here. You guys can check it out. And it's quite interesting. You'll find quite interesting info there. You won't be disappointed. And guys, get your I Bought the Dip t-shirt. Use a 10% discount code. I said GFY. If you guys know what that is, you guys know. Subscribe for more. And I shall see you guys in the next video. See ya.